I recorded an interview with Eric Coffin on December 21st. A portion of that interview was played prior to my discussion with world-renowned investor Jimmy Rogers. Due to time constraints, my overall discussion with Eric was limited for that show to his general views of the markets and his top junior gold pick for 2015, which was Precipitate Gold Corp. Trades in Toronto under the symbol PRG, in the U.S. under the symbol PREIF. It currently trades at around 12 to 13 cents. There are only around 38 million shares outstanding, so it has a very tiny market cap. Despite some very promising early exploration results, as Eric did explain on my December 30th episode of At Turning Hard Times into Good Times. But Eric had many more very interesting and I think potentially valuable ideas that we did not have time to air on my December 30th show, such as a discussion of the plummeting oil markets, prospects not only for gold and silver but also for the platinum group metals. He also discussed copper and base metals in general. Then Eric also had some very interesting things to say about several of the stocks that I follow and cover in my own newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, such as GoldQuest, Columbus Gold, Silvercrest Mines, and Virginia Mines. Because of my high opinion of Eric's integrity and savvy advice, I felt I must pass along those parts of my discussion with him that I did not have time to air on December 30th show. My discussion with Eric picks up on the recent major decline in oil prices. Please listen now to what Eric had to say. You're believing that we could see energy prices or oil remain around $60 or so for a protracted period of time here, Eric?
Yeah, I don't see, unless some of the OPEC members cave, and you get this, OPEC has what I would call sort of what gets called the prisoner's dilemma right now. You've got high-cost producers that are almost certainly losing money right now, countries like Venezuela. But they're the ones that can at least afford to cut production.
Right.
In a rational world, they'd be the first ones to cut and say, there's just no point doing this. And you see OPEC's production numbers drop off quickly. The guys that are the lowest cost producers, basically the Middle Eastern kingdoms, they're very, very concerned about OPEC keeping market share, because if it can't, there's no point to its existence. If they can't keep enough market share to be able to have some control over prices, there's no point in OPEC even existing. And they know that, so I think they've decided they'd rather have pain now for gain later. So I don't think they're going to give up very quickly. I guess if there's a big question mark to it all, it's a couple of the less stable places like Libya. Libyan production went up quite a bit in the last 2 months and probably isn't helping the situation. And I don't think OPEC's of a mind to cut their quota because they need it. But it's one of those places where, the crap could hit the fan tomorrow and that 700,000 or 800,000 barrels a day disappears. I think the U.S. production will probably top out if prices don't go back up, but it's not like it's going to happen overnight. It could go on for a year or two easily.
What about the oil sands in Canada? What sort of prices do they need to keep solvent and keep profitable?
Well, according to them, they're making money at 50 or 60. Although I doubt they're making any money at these prices, because the thing with oil sands and Venezuela actually has the same issue. You're dealing with usually very heavy oil, so
right.
It actually sells at a pretty big discount. So the stuff coming out of the tar sands is probably selling at West Texas Intermediate minus say $20 a barrel. So I can't imagine most of those guys are actually making any money right now, except a couple of the really, really big ones.
I suppose the real low-cost producers are quite all right with some of these people fading out of the picture then. And how would Saudi Arabia feel if Venezuela dropped out? But if Venezuela can't, as you point out, the ones that should be closing shop first are the last to do it because they can't afford to. So that's the only way that they have to earn foreign currency and to stay afloat, I guess. Yeah,
they've really got nothing else. So if they cut oil production, you're going to see them. They're going to be defaulting on their debt almost immediately. The debt's already trading bond traders obviously already expect them to default on it, and it's really almost all of their government. Almost the entire government revenue side comes straight out of those oil fields. Without that,
Eric, how much of this do you think might be motivated by geopolitical concerns and factors. Saudi Arabia, for example, we hear some things in the mainstream press here about the desire to squeeze Putin and Russia as hard as possible. And how much do you think the oil price reduction has to do with just a fall off in global demand, economic demand for consumption?
I think so far it's actually been growth in supply rather than fall off in demand. I think there's potential for fall off in demand, but I don't think it's happened yet. And that's the other big wild card is that, if China, for instance, slowed right down, then this could turn into a much longer saga than even I'm expecting. But I think it's mainly been growth in supply. Are the Saudis doing Washington's bidding? I guess it's possible. Certainly, they and Putin are on opposite sides of the fight in places like Syria. I don't think they're not big fans of the guy, so I don't exactly think they're upset that they're sticking it to him by doing this. They've got their own delicate balance too, of course, because you're dealing with a royal family that isn't necessarily popular across the whole country. They've got huge foreign reserves, so they can actually do this for a while and keep all of the spending programs, and there's spending programs, everything subsidized in Saudi Arabia through Saudi, to keep those going, which they have to do because they've got to keep people happy.
Exactly.
If they let the huge number of unemployed 20-year-olds in Saudi Arabia, if the checks stop, things can get nasty pretty quick.
Yeah, no, I think that's right. Well, getting back to our sector, the junior mining sector, you're up there in Vancouver. You have a chance to probably run into the people in the streets of Vancouver, the CEOs of these little companies that are struggling. How bad would you compare this downturn to others? Is it? I was talking to Quentin Henning the other day, and he was in his view, it's as bad as he's ever seen it. And he's been around for a while, as have you and I. What's your sense of this? And are we ever going to get out of this muck?
Yeah, I think as bad as it's ever been, it's probably accurate. I was talking to a promoter a few days ago, and he pointed something out that I hadn't really thought about. Because I mentioned to him, I said the late 90s felt as ugly as this to me. And he said, well, they were, but the thing to keep in mind is in the late 90s, you had all these goofy tech companies and internet and all this sort of stuff. Yeah. So he said he said that didn't help any of the junior mining companies directly. But he said the brokers that raised the money for them were still actually doing okay. There was something you could work on, and he said right now there's really nothing. He said it's not just juniors that are in trouble. He said there's all kinds of brokers dropping like flies. Oh, yeah, very good point. Yeah, and he said that's going to make for a tougher haul when it comes to coming out of this in terms of finding brokers who can help finance a company. In terms of longevity, we're pretty much there. This is, I think, if this isn't the longest bear market, it can't be more than a few weeks from being the longest bear market. Pretty ugly. Yeah. Well, I do. As I valued your service, and when your brother was with you, your late brother, you guys have done a great job in picking stocks. I've been following your work for quite a few years, and have run into you and your brother David when he was around, and have admired your knowledge of the industry on a fundamental basis. You also have, I think, our listeners should know that you also have, I think, a very good understanding of the global economy and where things are, and you attach that very well with the markets. What precious metals, I think, are quite different in many ways, in that I see them as a monetary metal. And gold, for example, it doesn't get consumed; it sits above the ground, and when people lose confidence in the monetary system, there tends to be more demand for gold, and to a lesser extent, a much lesser extent, I think that's true of silver. But the other metals, of course, and energy we just talked about, but the base metals and so forth, copper is not having a very fun time either these days. Copper producers, what's your outlook for copper, based on the global economy? I've been mildly bearish on copper for a couple of years, not big time bearish, only mildly. I've been expecting a pullback for a while on it, mainly due to supply issues. There were some fairly large things coming on stream. When you talk any base metal, really, you're talking about China, and I think everybody expects China to slow a little bit more next year. Mm-hmm. But I don't think it's going to be disastrous, but 7% growth or even a little bit less is possible. I think the big question right now is, does Beijing actually open the taps again?
Mm-hmm.
It doesn't seem like they want to. They're trying to avoid that. And I don't think that's a bad thing. I mean, they do need to mature their economy, but that's, I think we have to assume a little bit less demand. On the supply side, ironically, I'm a little more comfortable than I probably was a year ago, because we're starting to see projects get pushed back, and we're starting to see, timelines get moved back on projects. So it may be that the production doesn't grow as fast as I feared it would. I mean, I noticed a couple of days ago there was a news release from Barrick saying they were going to shut down their operation in Zambia because Zambia just increased the royalty from 2% to 20%.
Oh,
that's an overriding royalty.
Wow.
Yeah, so they just said, look, this just doesn't make any sense. So,
yeah,
and that's a couple of 100,000 tons. Codelco, although this wasn't an immediate thing, Codelco mentioned that their El Teniente, which is, I believe, the world's biggest copper mine, they're going underground, and they pushed back their timeline from 2017 to 2019. It's going to take longer and be more expensive. So things like this may actually help even things out. I wouldn't be surprised to see copper go lower, but I'm not really expecting anything disastrous. I mean, 10% maybe.
Mm-hmm.
And, for those that haven't traded these stocks or followed them that long, it probably feels like the end of the world when you see copper go from 450 to 275. But I can tell you, for somebody my age, most of my career in the mining business, you didn't even fantasize about 275 copper prices. Like that was way above where you thought it would ever go.
Well, it just shows how much things have changed in the cost of operating, and it has gone up a lot for mining projects, no question about it. Not to mention, as you alluded to earlier, the shortage of capital as we come out of this thing in the this decline in the gold sector, the gold mining sector as well. Eric, I'd like to ask you about a company that's nearby that I know you know a lot about as well. It's also on my list, and it's been a big disappointment in terms of its share price. Of course, that I don't know of many that haven't been a disappointment in the share prices in this sector. But GoldQuest Mining, how are you viewing that one now? They're right next door to Precipitate.
Yeah, I mean, they made a discovery there at Romero. Romero's over 2.5 million ounces of gold. It's a nice deposit. It's got its issues. I mean, it's refractory.
Yeah.
Which makes things more complicated. But I think the market, the management made the decision, which I think was the right one, that they had to test some of the other targets. Because they have tons of targets on the property they haven't touched yet. None of those have worked out yet, and people just, this being the kind of year it was, the stock's just got basically slagged all year long, and is now trading at about 8 cents. They probably have 4 or 5 cents a share in cash.
Mm-hmm.
So you're basically paying, $2 an ounce or something for the discovery, if that. I don't even think it's that much.
Yeah.
Which is, I know the management of the company fairly well, and I've got a lot of respect for Bill Fisher and Julio Escalante. And one thing Bill's quite good at is optimizing discoveries. I mean, he knows how to make the most of a deposit. So I think he'll be able to improve the economics of Romero, not by making it bigger, but just by getting smarter about how they go after it. I think that'll happen, and you still have discovery potential there. It's not like they drill all their targets. There's a lot of targets on that property they haven't touched yet, but I do have $5 or $6 million to play with.
Yeah.
I just talked to Bill recently, and he said they would be. One thing that hurt them is to stop drilling for a couple of months, but I think that, again, that's probably the right thing to do. They need to step back and take a harder look at the targets, but I think they'll be drilling again in January. So
yeah.
I mean,
well,
at 8 cents, that's probably a pretty good shot.
Yeah, with 2.5 million ounces already refractory, albeit refractory ounces. Bill Fisher's been around for a while. Has had a very, very good track record in the past. So I agree with you there. What about Columbus Gold? They're in, I guess they're in French Guiana in South America, right?
Yeah, and in Nevada.
Yes, that's right. They're actually sort of a project generator in Nevada, I believe, right?
Well, they are, and they're hooked up with a couple of septuagenarians, I guess they are now, that have a very strong discovery track record in Nevada. And the guy running the Nevada project is a guy named Andy Wallace, who's found several mines in Nevada. He's really high on their Nevada project east side. And I spent a couple hours on the phone with Andy actually last month, and he's surprisingly impressively bullish about it. And that bullishness seems to have worked in terms of attracting interest, because they raised quite a bit of money a couple of months ago, and they're planning, like, if you want to talk about a company that's doing something, they're planning. Andy's laid out a drill program that I believe is, what was the number? It was a crazy big number. It was like 150,000 feet.
Wow.
Yeah. Oh yeah. He's not kidding around. Like he's planning to drill like 100 holes on that property this year. And they've just finished follow-up drilling at their project in Guyana that's being funded by Nordgold, which is a Russia-based gold producer. They should have another resource estimate out and probably a PEA out in a couple of months. And I think between those two things, I mean, it's one of those companies that's managed to stay really active, and they'll have incredibly strong news flow all through the year. And I wouldn't bet against Andy Wallace in Nevada. I mean, the guy's made a lot of discoveries, and I was honestly shocked when he told me how big the drill program he laid out was, but he's not kidding around.
Yeah. Yeah, and their project in Guyana, in French Guyana, is they have just a whisker under 50% of that with the big Russian company, successful company, a pretty good sized producer, international producer that's funding it up through, I think, through feasibility, I believe.
Yeah, and it's $30 million or a feasibility study, whichever comes last. To get 50.01%, and I doubt they'll get all the way through a feasibility study for $30 million, so they'll probably be actually spending more than that. But there should be a new resource estimate. The big question mark is, after this resource estimate, does Nord keep going? I mean, they don't seem to be troubled by it. They didn't slow down. I mean, a lot of people pulled back late in the year, but they didn't. They just kept going and finished their infill drilling program. And there were a lot of holes in this. And if you looked at the section that they had after the last drill phase when they did their initial estimate, there were a lot of holes in that section which they should have filled in with the drill holes. So I think it's fairly reasonable to expect that resource is going to get bigger. Actually.
Yeah, and it's a stock trading at around 36 cents in U.S. money. I guess around 40 cents or so in Canadian dollars. But it's certainly one of my favorites as well. A couple more I'd like to ask you quickly about before we conclude our discussion. One would be Silvercrest Mines is certainly one that you have liked, and you were onto that one a long time ago. Give us an update on that, if you would, please, Eric.
I mean, Silvercrest, like anybody that's got silver or gold in their name, has gotten whacked. But I mean, their Santa Elena project has been, I think, one of the more successful mine startups in the last few years. It's a great, very talented management group, and they were transitioning in the second half of the year, going from being essentially an oxide heap leach to a mill underground situation, and they're really just getting up to speed now in terms of getting enough stopes going and feeding the mill at the 3,000 ton a day rate that it was designed for. That'll probably happen over the next month or so. The grades are pretty good at where they start mining the underground, so I'm expecting they're probably going to do fairly well. And it's one of those stocks that, if we get any kind of a lift in metal prices, should do quite well, because they have managed to hold themselves together and keep making money and keep making operating profit in an environment where most of their peers haven't been able to do that. And I think that speaks to how strong the management group is. It's a great management. Yeah,
they started out very small, and as you've pointed out, these are guys that have been very successful. They do what they say they're going to do, and they started out small and sort of grew the company, have been growing the company organically, and I believe they have a lot of exploration potential, not just on that property, but they have another property, I think, in Mexico as well, that looks good.
Well, and I know Eric Fear, their COO and exploration manager, is always looking. I mean, I talk to Eric occasionally, and I know he's liking the situation in Mexico right now, because with the recent changes in their mining act, it's a lot tougher for locals, especially, to just sit on projects. So his expectation, and I agree with it, is there's going to be a huge amount of ground come open in Mexico over the next 12 to 24 months. And I think if you're positioned there, which he certainly is, to take advantage of all this new stuff that comes open, I expect to see Silvercrest pick up some pretty interesting stuff over the next little while.
Yeah, that's Silvercrest Mines, SVL, in Vancouver, or I should say in the Venture Exchange in Canada. Columbus Gold is CGT in Toronto, and GoldQuest GQC, and Precipitate Gold PRG. Those are the Canadian symbols. You can buy them also, all those companies down here in the States, as I have personally. I would one more I'd like to ask you about, Eric, before we conclude our discussion today, or maybe it would be a lot more I'd like to ask you about if we have time. But Virginia Mines, soon to be merged with Osisko Royalties. What's your view of that, and do you like the merger?
I do. I mean, Virginia is probably one of the oldest companies on my list, if you will. I followed it for a long, long time. Through their Eleanor discovery, when they were taken over by Goldcorp, with basically the takeover, had Goldcorp buying the Eleanor project, which was Virginia's discovery in northern Quebec, and then everything else was spun into a new company, Virginia Mines. David and I stuck with it. Again, as much as anything, this is a management story. I mean, Andre Goma and Paul Archer are a couple of the best guys in the business. I mean,
yes.
Paul's a fantastic exploration guy. Andre's one of the best negotiators I've ever seen. I mean, I can't believe the deals this guy gets with majors when it comes to negotiating property options. I would not want to be on the other side of the desk from this guy. And I think the combination of that group with their exploration gifts and negotiating skills, and the Osisko team, which essentially has a similar set of gifts, I tend to, like a lot of newsletter writers, I tend to sort of say, great, this is it, it's a big game. I'll take my money and stick it on my list. This is one where I said when this was announced, you know what, I think I'm going to stick with this one.
Mm-hmm.
I didn't have a royalty deal on my list before, so effectively I'm going to have one now. And this is such a great combination of talented management groups. I mean,
yeah,
if you're going to bet on anybody, this is a group to bet on. And I really like Osisko's. Osisko's got some really interesting stuff in Mexico in the Guerrero Belt too.
Yes.
They've never talked about it much, but they've got a 1 million hectare property down there. They
Yes.
announced some pretty interesting drill results. They've never actually said exactly where they are. And the property's 400,000 acres, or it's 2.5 million acres, so it's a little too big to throw a dart at. I wondered out loud in the newsletter when I talked about the merger, are we going to see a couple of spin-out companies? I think there's real potential for this group, once they put everything together, to say, okay, let's do, say, a base metal Quebec spin-out, Mexico spin-out, that sort of thing. I think it's worth sticking around just to see if they do that and be a part of it when they happen, because I don't think you can pick two better management groups at the development level than these two.
Yeah, I totally agree. And in Quebec, it's a great story, and of course the advantages, the business advantages of a royalty company as opposed to an operating company too. We've discussed on this show in the past. So,
I think we might. I mean, the U.S. dollar seems to be unstoppable right now.
Yeah,
but it's long dollar is going to be about the most popular trade in the market right now.
Mm-hmm.
And when everything's that one-sided, they have a way of topping out. And I think all we really need is to see a little bit of weakness in the New York markets, which is going to happen at some point. And I think one thing about the oil price dropping that gives me a little bit of comfort, if you will, it's going to help the countries that need it most, like the Europeans and the Japanese. Neither of them produce any energy to speak of. That oil price drop, if it lasts through the year, might just give their economies a little bit of a boost, and that's really all we need to see to see a reversal in the trend we've seen in the last 2 years.
Yeah.
Their growth rates go up. It doesn't have to be much, even like 0.5%, 0.75%. That changes the paradigm. The U.S. dollar tops, and then we all have some fun.
Well, we can hope, and certainly markets are. We've had a pretty good bull market in the dollar for the last couple of years or so, and these things don't last forever. So trends do change, Eric, and I'm looking forward to meeting up with you in Vancouver at the Cambridge House Show in a couple of weeks from now, and I would like to sit down with you and maybe go over the Precipitate story, you and Jeff perhaps, and do an update for my readers, as well as discuss it from time to time on this radio show. I do want to thank you, Eric, for being with me again, and all the best to you, and Merry Christmas to you and your family, and we'll see you in Vancouver in a couple of weeks.
Absolutely. There's some local craft beer with your name on it, Jerry.
Okay. Thank you very much. We'll see you then. Well, I hope you enjoyed Eric's views on the markets, as well as a few of his favorite stocks, which also happen to be some of my favorite stocks and those that I cover in my newsletter. If you would like to know more about Eric Coffin's work and his newsletter, go to hraadvisory.com. That's hraadvisory.com. And if you'd like to know more about my work and my newsletter, go to miningstocks.com. miningstocks.com.